This Thursday will be the long-awaited for RoboTaxi Launch by Elon Musk, and Uber drivers are anxiously anticipating a future where autonomous ride-hailing vehicles could potentially eliminate their jobs. In a recent interview, asked if Tesla's RoboTaxi could influence in any way his job at Uber, he said, "Simply put, we're in serious trouble. If this RoboTaxi happens, it will wipe us out." In this video, first, we will discuss how autonomous vehicles could disrupt Uber's business as RoboTaxi gains prominence in the coming years, and also expose Tesla's first RoboTaxi launch. But stay tuned until the end, because we will also talk about the silver lining for Uber drivers, and then we will present the top analysis, including Uber technical and fundamental analysis, and explore current risks, not yet priced into the current Uber stock valuation. Now let's dive in. So, when will RoboTaxi become a widespread reality? First, it is important to highlight that RoboTaxi is already a reality, but still on a limited scale. For instance, it is already in service, the self-driving taxi services by Waymo, a Google-owned company, providing over 100,000 paid rides per week in San Francisco, Phoenix, and Los Angeles. So, there is no doubt that RoboTaxi is already here, but there are some issues to make it a wide-range service, as well as other specific factors about Tesla technology that could be delaying its first RoboTaxi launch, scheduled to be this Thursday, October 10th. Tesla is taking longer to unleash its RoboTaxi, because it has taken a unique approach to the RoboTaxi market, since its fully self-driving technology is built solely on camera-based vision, proprietary AI models, and robust computing power, not following its competitor that uses a combination of cameras, sensors, and LiDAR, light detection and ranging, within geo-fenced areas. Tesla's self-driving technology is set to stand out over the longer term, because Elon Musk has dismissed LiDAR, and aims for full self-driving capability without relying on predefined road maps. But, short-term, is having to deal with Tesla's current disadvantage, because its system is much more complex and still remains at level 2, while competitors have already achieved level 5, which represents full autonomy. Could RoboTaxi initial costs become a problem? Even though RoboTaxi involves high initial investment costs, potential profitability is promising. Therefore, we will highlight 5 positive factors that could help overcome initial costs. 1. In the US, Uber charges between $2 to $4 per mile, while rates in other regions typically exceed $1 per mile. 2. RoboTaxis are projected to charge about $1 per mile, making them a highly competitive alternative. 3. A RoboTaxi driving 50,000 miles per year, approximately 136 miles per day, could generate $50,000 in annual revenue. 4. Operating costs, including charging, cleaning, maintenance, and insurance, are estimated to be under 50 cents per mile, potentially yielding an annual profit of $25,000 per vehicle, to be shared between the vehicle owner and the network operator. 5. Initial RoboTaxi prototypes exceeded $150,000, but current production models are nearing a cost of $30,000, significantly reducing investment barriers. What is the silver lining for taxi and Uber drivers in the face of the RoboTaxi threat? If tech companies can build truly safe and reliable RoboTaxis, it will unquestionably pose a threat to the millions of taxi and rideshare drivers in the United States and worldwide. Although, for now, there is still a long way to go on tests, before they become truly reliable for major government safety standards. Despite aggressive marketing and over 100,000 weekly rides, Waymo is still operating at a substantial loss, with around $2 billion lost in the first half of this year. And the timeline for when RoboTaxis might significantly reduce the demand for human drivers remains uncertain. Persistent technical issues also plague RoboTaxi services in busy cities. For example, General Motors has dramatically cut spending on its autonomous vehicle division, Cruise, following a difficult year that included an incident in which one of its vehicles struck and pinned down a pedestrian, tarnishing its reputation as a once promising competitor to Waymo. Even the most advanced RoboTaxi ventures today are essentially high-tech demos, and what these services will look like in reality remains unknown. Now let's go to the top analysis. What RoboTaxi's risks for Uber business are not yet priced into the current stock valuation? To begin, let's get right into the chart. From a technical analysis perspective, you can see that Uber stock has been trending up since December 2022, when the bottom white trend line started to form. Even though, on March 2024, Uber stock felt some fear from investors and started a pullback, it just broke out from the counter trend line and retested. Since then, Uber stock price is holding ground and seems like it will search new ATH, probably to $88, so this could be a good time to buy if this trend continues. I am not a financial advisor, but in my investment strategy, since the price broke out from the counter trend line and retested the counter trend line, from a chart analysis perspective, it is a confirmation that price wants to keep going up. Now let's go over some fundamental analysis to identify all the risks Uber business will be facing. Based on its current growth and profitability trajectory, Uber CEO Dara Khosrowshahi appears unconcerned about the rise of Tesla's robotaxi and remains skeptical. He cites concerns that Tesla owners might be reluctant to have their cars driven by strangers. But Uber faces a looming threat from the expansion of autonomous vehicles, which could severely disrupt its business model. Once robotaxis achieves widespread adoption, the market will likely be dominated by a few major players, due to the complexity of the technology, the magnitude of data, and significant difficulties of scale in building and maintaining fleets. After selling its autonomous vehicle unit to Aurora in 2020, Uber finds itself at a disadvantage unless it is ready to spend a huge amount of money on a significant autonomous vehicle technology acquisition. Once technological and regulatory challenges are addressed, robotaxis can be rapidly deployed in high-demand urban areas. This scalability could enable Tesla to enter markets that are traditionally difficult for automakers, such as ride-hailing and transportation services. Such expansion could position Tesla to capture a significant share of the broader mobility market, impacting, financially, companies such as Uber, which currently has the lead in this market, estimated to be worth trillions of dollars globally. While widespread adoption of autonomous vehicles may still be years away, Uber could feel the impact much sooner, as investors start pricing in the robotaxi effects on the company. The company's revenue distribution likely follows a power law, with a small number of key cities generating a disproportionate share of its income. If these crucial locations are disrupted by robotaxis, Uber's business could struggle even before autonomous vehicles become global. While Uber's valuation might seem reasonable given its current growth and profitability trajectory, the risk posed by robotaxis has not been fully factored in. From now on, Uber's share price valuation will depend heavily on the company's ability to improve profit margins and adapt to the arrival of robotaxis. Uber's revenue multiple is around 3.5, which suggests a price-to-earnings ratio of about 30 times when using a normalized profit margin. However, Uber's near-term performance is likely to depend more on continued margin improvement than on valuation adjustments. Although autonomous vehicle companies have partnered with Uber to aggregate rider demand, they will eventually seek to compete directly for better unit economics in a concentrated market. For instance, Tesla is unlikely to partner with Uber for its robotaxi service, which demonstrates how autonomous vehicle companies will seek to maximize the returns on their significant investments, preferring to avoid sharing revenue with intermediaries. As robotaxis gains prominence in the coming years, major players in the sector will likely try to bypass Uber altogether, and even if Uber retains its role as an intermediary, its take rate may come under pressure, presenting a considerable downside risk to its stock valuation. In summary, Uber's stock price is suggesting a potential breakout that could lead to new all-time highs or a retest of its last support near $58. While Uber's CEO remains skeptical of Tesla's robotaxi threat, the rise of autonomous vehicles poses a significant risk to Uber's business model. Although Uber's valuation currently reflects its growth and profitability, the looming impact of robotaxis has not been fully priced in, and Uber's ability to adapt and improve profit margins will be critical. Partnerships with autonomous vehicle companies may be short-lived as these companies aim to compete directly, putting Uber's stock valuation under pressure due to the potential decline in its intermediary role. Don't miss out on the video above. Thanks for watching. Good luck and good profit. By Edward Cash Trader. Please read the disclaimer in the description below.